This is educational, not trading or investment advice, okay? This is entertainment, mainly educational. Future stocks, bond trading of any kind involves substantial risk. You may lose everything you have. Before trading or investments, do your own due diligence. This is not a recommendation to go out and trade with your money, okay? If you do so, you're on your own. If you're watching or listening to this video, you are agreeing to these terms. Okay, let's get to it. Welcome and thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel. Day trading for an ROI payout. It's just my trade journal market analysis for Wednesday, January 3rd. We've got Fed minutes as a news catalyst, 2 p.m. Eastern Standard daily affirmation. I see it and understand. Rigid discipline and rules. Flexible in outcome expectations, independent thinker, impeccable risk manager, precision-based trader, responsible business manager, and we got a weekly ES chart. All the green candles were the last 3 weeks of 2023, and what we've got here is the first day and a half of 2024, and we've got a down candle with lots of air from the 9 EMA. So yeah, this perfectly swing high right here. So a high and two lower highs to beside it. To me, this looks like a bearish candle for the week, but again, it's FOMC minutes here in the afternoon and then non-farm payroll on Fridays. I'm going to tread carefully. Let's look at the lower time frames on the ES and look at the levels. 15-minute benchmark. It's almost like a repeat of the prior day. Here we are Wednesday, 15-minute ES, S&P 500, 15-minute. And the big thing was this short opportunity with the Judas swing up during London. Let me blow that up a little. You can see here, London opened, and basically we had a 47.8550. Below it was the prior day's RTH open and New York midnight open, call it 47.83 and change. So we gap up, and we have a premium candle wick here and a 3-minute fair value gap that was an inversion fair value gap, and we just plunged right away to 10 handles. Basically where we're at right now is we really couldn't even get back above New York midnight open, and we're just above this weekly volume imbalance, which we didn't really close below because we had the rally on the previous day that kind of saved the day. Now that rally had a high 47.9075 on the prior day PM high, but we really haven't come back to that. So let's see if RTH crew can at least crawl back to London or New York midnight open here and bust through this 3-minute fair value gap. Otherwise, what is below this is we've got a really big PD array weekly fair value gap, and the consequent encroachment 47.04. I know it's a ways away, but still it is not bullish, definitely, the way the price action is behaving right now. So I'm just saying I see no reason to go long at all whatsoever, and I'm just being patient in cash right now. I did play for a piece of this on the London, but I'm just going to be patient because I need now the time of day, which will be that silver bullet AM RTH session, and then just hold. If there is a trade, wait for the FOMC minutes catalyst. The low from the prior day, 47.6550, looks like we're coming real close to that. We'll see if we can go and get sell side liquidity and maybe go and touch this top of the weekly fair value gap, and that comes in at 47.42.75. So short video, but it seems pretty, for me, clear that we've got a, for sure, bias short. And I just need the next setup, and I'm going to use patience, sitting on hands, and wait for the appropriate time. Thanks for watching. Shout out to the OG subscribers, and welcome to the new ones. Aloha. Take care. Bye.